With only 48 hours until the monthly candle close and Bitcoin still sitting around the 69k region, things are getting tight. In today's video, we're going to be discussing the significance of a monthly candle close over the prior 2021 all-time high, the upcoming halving event, the total cryptocurrency market cap, and exactly what is happening on the short-term charts. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic Easter weekend. In today's video, we're going to be diving deep into the macro and the short-term charts, leaving literally no stone unturned, discussing the impact the short-term price action could have on the upcoming monthly candle close, the key levels you need to be paying attention to on the short term, and the next likely move. We'll also be discussing the $69,000 resistance and the significance this level does have on the monthly charts, going over exactly what would happen if we are able to close a monthly candle above this level, and the future projections for Bitcoin's price action going forward. We'll also be discussing the total cryptocurrency market cap, total altcoin market cap, and all of the other important data. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you were interested in our trading channel, our VIP group, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, health, daily video, news, and trade setup chat. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment of the free channel. We do have a sale going on at the moment. You can join up for a nice discount, so go ahead and check that out. Let's dive into a video. So starting on that important market data. 24-hour volume is sitting at 144 billion. Of course, it is down 14.5%. That is basically attributed to the fact that we are now in a chop zone, and more importantly, we are entering a Easter weekend. We are entering a long weekend, so we do generally see volume drop down on these public holidays, and we do generally see volume drop down over weekends in general. As per 24-hour liquidations, we are up 4.82%. Suggesting that we are starting to see a little bit of a chop on the short term. Again, 148 million in liquidations. Looking at those liquidations, 10 of the 148 million, 104 million have come from long positions and 43 million have come from short positions. Taking a very brief look at the price action, we haven't really seen all that much happen in the last 48 hours. We are more or less just chopping in this horizontal consolidation above the 69,000 major support. In today's video, we're going to be discussing in depth what is happening with the price action here and where we expect the price action to go and the key levels that you should be paying attention to. Moving over to the broader markets, taking a look at the DXY. The DXY, again, not too much movement in the last couple days. We are still seeing it travel along this major uptrending support line. Again, we do expect the uptrend to continue into the next level of resistance, which is going to be this 105 level, provided this uptrend holds. If we do break above 105, that is going to result in a continuation higher. This will be relatively bearish for traditional assets. If we do see a rejection from here, which we are expecting, we are likely going to see a correction underneath this uptrend and continuation to retest our lows, potentially even those yearly low levels. So we're watching 2 points. We are watching this uptrending support line, and we are watching this horizontal resistance, which we've retested in the past. Moving over to the S&P 500, overall still looking very strong, sitting at $5,300. Again, we are entering, and we have entered price discovery. We are continuing upwards very aggressively, and we will likely continue to do so, provided the levels of support we have established can remain as support. The key level at the moment now is going to be that 5,000 trigger point. A loss of 5,000 results in a correction downwards to retest our prior all-time high. Provided we remain above 5,000, we expect macro continuations higher. On the short term, if we do lose 5,100, that is going to be a short-term trigger for a correction back to a 5,000 level. However, like we said, we are essentially bullish for a continuation on the macro above, and we are bearish on the short term for a continuation downwards below. This is how we are taking a look at it. Moving over to the Dow Jones, exactly as expected, guys. Remember, we told you as soon as we broke above this level, we were expecting a price target of 40,000. We have reached 40,000. We are sitting at 40,176. Exactly the same thing goes for the S&P 500 over here as it does here on the Dow Jones. Provided we are able to remain above 38,000, we are expecting macro continuations upwards no matter what happens on the short term. If we see these pullbacks, provided we are able to hold above 38k, we are expecting every correction that we do see to be a healthy correction. It is only if we lose that 38,000 will we expect a higher time frame correction to fill that VRPV gap and result in a retracement back down to our prior all-time high. Overall, looking fantastic. We are in price discovery. Targets are going to be whole numbers. With that being said, let's go ahead and jump into Bitcoin because we have a lot to discuss today. But a quick word from Bitget and BingX before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin's price action. So as you all know, we have 2 days and 1 hour remaining until the weekly and the monthly candle close. And this is by far and large the most important monthly candle close for the last 4 years, since November 2020. And I'll say one more thing. Coming into the next month, April, we are entering a very significant month of Bitcoin as we do have the halving event. The halving event is in 21 days. So that takes us to around about the 20th of April. A very, very bullish event for Bitcoin historically, and we have seen generally when the halving event occurs, that is what triggers the parabolic phase or that bull run phase for the cryptocurrency markets. We're discussing that in today's video as well. So as we know, a very important event coming up. We have 2 days until that monthly candle close. So let's go ahead and jump into why this level is so important, and then we'll break it down to the short term as we go. So moving over to the macro charts to discuss and talk about why this level is so important. Historically, what we have seen is every single time we break above a monthly candle of the prior all-time high, that is when we enter this parabolic phase for Bitcoin. The parabolic phase of the 4-year cycle, the parabolic phase of the bull market. If we take a look at what we have seen in the past, specifically just looking at our key levels, we historically have entered a bull market when we break above the dotted trend line of the prior cycle. So the dotted trend line in this instance was represented by our dead cat bounce highs, with the dotted trend line over here, the dotted trend line over here, the dotted trend line over here. The dotted trend line in this instance was 48,000. So based on what we have seen in the past, we enter a bull market above 48,000, and what we see in the past is we enter the parabolic phase of the bull market when Bitcoin closes a monthly candle above that solid trend line, which is the prior all-time high. So how can we quantify this? How can we prove this with data? So let's go ahead and take a look at our trend angles. The trend angle from the all-time low to that solid trend line in comparison to the trend angle from the solid trend line, which is the monthly candle close above the solid trend line prior time high to the all-time high, we see a significant shift in the strength of the trend that lasts multiple months, between 8 to 10 months. What we can see is the angle of the trend increases from around 35, 36, 37 degrees to 70 to high 50 degree angles. That is significant as again, it reflects a increased period of overall demand, volume, strength, you name it. We enter a parabolic phase of the bull run cycle. And in this phase, we generally see significant growth for not only Bitcoin, but for altcoins alike. We'll come back and discuss the altcoin part in just a moment. Now, if we look at our date range trend, what we have noticed historically is once we are able to break above that solid trend line, we have seen a top for Bitcoin in 8, to 12 bars, which is 8 to 12 months. So less than a year after a monthly candle close above that solid trend line, above the prior all-time high, we are expecting a top. So if we assume that we break out this month, we can drag 8 to 12 bars. That takes us to November, to March 2025. So a top is expected between November 2024 and March 2025. Based on historical price patterns. We can go a step further with this. If we take a look at our RSI, what we have noticed is every single time we break above the 80 on the RSI, we have a specific amount of time until we actually reach the all-time high. So let's go ahead and take a look at this. We broke out of the 80 on this vertical line. If we drag the RSI across a date range trend to the all-time high, we had 10 bars. Let's go again. We broke the RSI right over here. We're gonna drag across from here. We have 8 bars until the all-time high. If we go ahead on the prior cycle, we broke the 80 on the RSI over here. We drag that across to the all-time high. We have 10 bars. What this is suggestive of, it is suggestive that when the RSI breaks above the 80 point and enters this overbought territory, we generally see between 8 to 10 bars until the top is in for Bitcoin. So a very good strategy to time the top or potential exits would be to give an average of the 3. We look at 8 to 10. So we take our highest and our lowest, divide it by each other. That gives us 2. We wait for that break on the 80. We count those 8 bars and then we add 2 from that point. So that's going to take us to December, to March, and then we go ahead and say, well, between those 2 points, so between 8 bars after the all-time high break, or should I say 8 bars, after the 80 point breaks on the RSI, I'm going to be looking to exit my positions for the next 2 months leading into that 10th bar. So since we have, again, we have 10 bars here, 8 bars here, 10 bars here, we simply go 10 minus 8, that equals 2. We count 8 bars from the 80 point breakout, and then with those 2 bars remaining, that is when we're expecting the top to be in Bitcoin, or at least that is when it is likely, most likely to see a potential top if we have not seen a top already. So we can use the RSI to potentially time our exits, specifically focusing on momentum. Remember, if you're looking for a exact price, like I want to sell at 100,000, or I want to sell at 400,000, craziness, right? You're going to be waiting for one exact number out of all of the possible numbers that could occur between where you entered and where you're exiting, If you're looking for an exact number and you're getting emotionally attached to that number, not only does it become significantly more unlikely that your number is going to be reached, especially if it comes from an emotional perspective, but it's going to be much harder for you to make logical decisions on scaling out or selling your positions if that number has not yet been reached. You're more likely to make irrational decisions. If you're basing your exits on data of buyers and sellers, remember the RSI is a derivative of the price action chart. The price action is a reflection of the actions of buyers and sellers, You can then actually make decisions on when to sell based on what the buyers and sellers are suggestive of doing over a period of time. It is making decisions on data rather than making decisions on magical numbers. So that is what I'm going to be doing, and that is what I recommend. But coming back to my main point of the video, guys, if we do see that monthly candle above that prior all-time high, we have historically seen us into that parabolic phase, that explosive phase for Bitcoin. So a very important event coming up, something to pay massive attention to. Let's talk about what happens if we fail to close. So if we fail to close a monthly candle above the prior all-time high, that really isn't going to be a massive concern. It depends what happens on the short-term chart, and we'll discuss that in a second. If, for example, we close at 68,000, well, we just delay it for another month. If we close at 65,000, we just delay it for another month. It's not the end of the world. It will be a big problem if we start losing 60,000, but we'll discuss that in just a moment. So let's go over now to the total cryptocurrency market cap, as a lot of people are asking me, Whale, when are altcoins going to go parabolic? We're going to answer that right now. So historically, if we take a look at the altcoin market on the right-hand side, we have seen the largest percentage growth of the altcoin market occur when we break above the dead cap bounce high of the prior cycle. So we have this dead cap bounce high point. Let's go ahead and delete this trend line. We have a few trend lines we want to watch. The dead cap bounce high point. When we break above the dead cap bounce high point, that is when we see altcoins see that significant explosion in price action. Now, if we take a look at where the altcoin market cap is now in comparison to the total market cap, okay, and we can even take a look at it in comparison to Bitcoin. So let's go ahead and actually take a look at it in comparison to Bitcoin to be more specific and delete everything over here. What we have noticed is, once Bitcoin breaks the prior all-time high on the monthly chart, that is really when altcoins start to pick up. If we take a look at this, I'll show you. So we're looking at this candle over here, and we're going to go ahead and draw a vertical line on this candle, and that candle is going to be right over here for the altcoin market cap. So what we can see is that when Bitcoin breaks above that prior all-time high, the altcoin market cap is only just lagging behind, not yet coming up to retest or break through that prior dotted trend line, or should I say the prior dead cap bounce. So what we can see here is, again, Bitcoin is retesting that prior all-time high, and altcoins are just underneath that level. So we are seeing exactly the same pattern play out as we have seen in the past. It is suggestive that the altcoin market cap is not lagging in comparison to historical price charts. It is exactly where it's supposed to be. We're seeing exactly the same thing. If we see Bitcoin break above that all-time high, we are expecting the altcoin market cap to do a breakout of the dotted trend line in the following month, and that is when we're going to see that parabolic growth occur for altcoins. So at the moment, I wouldn't be too stressed. Altcoins seem to be traveling how they should be traveling. They seem to be traveling exactly as they have in the past. Yes, there are some altcoins that are overperforming. Yes, there are some altcoins that are underperforming. That is how the market works. Let's go over to the short-term price action. So a lot is really happening on the short term, and the short term is incredibly important, guys. I want to really stress how important the short-term charts really are in determining not only the likelihood of a monthly candle close, but the directional moves on the higher time frame for Bitcoin. And we've said this already, going back to this chart over here. You've said this multiple times. We are still in the danger zone. Technically, we have 2 days remaining, right? The danger zone is the price range between the weekly high of the prior cycle and the all-time high of the prior cycle. The distance between these points, the points between 65.5k and 69k, is the danger zone. This is a major danger zone as a directional break, meaning depending on the direction of which we close the price action above 69k or below 65.5k will determine likely the next few weeks or even few months of directional price action for Bitcoin. And these short-term charts play a massive role in influencing the likelihood of a close above or below. So on the short term, there are a few key levels we are really focusing on. Number one is going to be this major uptrending diagonal support line. Of course, we don't have to explain why this is so significant. This is a reflection of not only the overall trend of price action, okay, but it is acting as a trigger point for a change in the trend, meaning if the price action breaks below this uptrending trend line, we will be entering a downtrend. If we do break below the uptrend, we'll be expecting a correction back down to retest that major $60,000 level. Again, $60,000 is sitting all the way down over here underneath the 65.5k major support level, okay? And that will increase the likelihood of a break below, a close below, and a continuation lower. That would be bearish. So in the short term, if we are able to remain above this uptrend, we are still in an uptrend, we are still bullish. Even if we see a correction back down to it, we are technically still bullish, provided we remain above that uptrending support. For a higher time frame correction, we would need to see 60,000 lost. Only if 60,000 is lost will we expect a correction into the mid to low 50k region to fill that VRPV gap, most likely down to 58, potentially 52, if those levels are broken. But again, all of this we have just said is the least likely scenario, provided Bitcoin is able to remain above this major uptrending support level. So let's go ahead now and discuss what Bitcoin is doing and where Bitcoin is likely to go. At the moment, Bitcoin broke out of our falling expanding wedge pattern. Of course, our falling expanding wedge pattern had a measured move from our entrance, okay, to point 1, from breakout. Our measured move target is going to be 73k. So we're still now traveling in this uptrend represented by this trend line again, upwards towards that $73,000 to $74,000 resistance, which is the prior high of 2024 for Bitcoin. On the short term, however, we have run into a little bit of resistance. The short term resistance we are now challenging is going to be a horizontal point of resistance. We can go ahead and mark that out by using our recent highs of the price action to mark out this area of resistance. Of course, we did see a small little deviation above this level. Again, we do know this is a resistance as we do have a significant drop off in the VRPV. And the moment we break above this range at 71k. So we know that 71k is a short-term resistance, but we also know it is a trigger point for a continuation of 73k as per the volume ranges. We can see that a drop off from this range decreases historical resistance into that 73k range. Therefore, we have a decreased area of resistance and we have a decreased area of overall volume. Therefore, the volatility moving through this level, if we break upwards, shall increase, resulting in a surge in price action to 74,000. However, until that level breaks, we are in this short-term consolidation between our 69k support and our 71k resistance. What am I looking at? First and foremost, I respect the overall trend. I understand what is happening. We have got a low and we have got at the moment a higher low. We are seeing an uptrend develop. So provided we are able to remain above this local low, we are going to continue in a likely direction upwards and through. It is only if we lose this low at 68.7 would we expect a correction to retest that major uptrend we talked about just a few moments ago. Until we lose that low, expect a continuation upwards. If we want to see a breakout of 71,000 and thus a continuation to 73, we need to see the RSI break. The RSI over here is a reflection of the momentum within this consolidation. You can see the momentum currently is negative. However, if the RSI breaks upwards, we see a positive momentum shift. The probability for a continuation through 71 and to 74, 73 significantly increases. So we are in a neutral consolidation, in a uptrend with decreasing momentum, with a greater probability of a continuation upwards and a confirmation of a continuation upwards if that RSI breaks upwards. It is only if we lose that low point at 68.7 would the short-term flip bearish again. Remember guys, just because we have seen a correction from an area of short-term resistance into an area of support, this move doesn't make us short-term bearish. The trend is still intact. If we lose this low, then we become short-term bearish. Make sure you stay perspective of the overall trend and make sure you understand how these things work. So I'm going to leave it there today, guys. Thank you so much for watching. Our next video is going to be on the day of the monthly candle close. So it is going to be a big video and a very important one. I hope to see you all then. Have a great rest of your weekend. I'll see you there. Cheers.